lead off with or something. I don't know. We got to work on our intro. Guys, it is after 5 o'clock. It's time for After Hours Real Estate. Chris Peshek here. I'm a real estate broker just outside of Austin, Texas, in the beautiful Texas Hill Country. That guy, Stephen Babcock, is a mortgage loan originator, also just outside of Austin, Texas, a little north of me, also in the beautiful Texas Hill Country. And on this show, we talk about real estate and mortgages and everything. Talk about everything.
Everything.
Literally everything. If you have thoughts or comments, or if you have something you want us to talk about, drop it in the comments. Chances are we will have an opinion on it and we will tell you our opinion, and we don't care. But it's after hours. What we typically do is have a little bit of adult beverage, because the whole point behind this show was giving people a little bit of an insight to what it's like when a realtor and a lender sit down at a bar and have a couple of beers. So, my friend, what are you drinking today?
Well, sir, I am having my favorite, actually, beer of all time, until you told me that they weren't actually brewed locally anymore. Thanks a lot for that. But yeah, Karbach, Love Street.
It's still brewed in Houston. It's just brewed by InBev now, not by Karbach anymore. They bought the name. It's fine.
Cute.
It's okay.
And then they changed the ingredients, is what you told me. So that's even better.
Which is why I can't drink it anymore. Why I refuse to drink it. I am finishing up a nice little cocktail, summer cocktail here, my friend. Cheers.
Excellent.
Revolution Spirits Gin, which is brewed right over, or distilled right over here on Fitzhugh Road outside of Dripping Springs, Texas. Yeah.
Fantastic. All right. So what do you have for us today, sir? What articles are we getting into?
Man, we're going to jump in because, you and I have been talking, and with the job numbers that have been kind of all over the place and being corrected and all this stuff, there's been a lot of talk about what's going to happen in interest rates. And so let's pull up here a little Yahoo Finance article. And I think this title pretty much sums up what you and I have been saying about this for the last year and a half. The Fed is expected to cut rates. Don't expect mortgage rates to follow. They're not tied. Before we even get into this, I just want to get your reaction to the title.
It's a little misleading. It's pretty much what we've been saying.
Yeah.
What I've really been trying to say is that the mortgage rates don't wait to move for what the Fed has to say. The mortgage rates will adjust and move if they think the Fed is going to say so. So if they think the Fed is going to lower rates, they're not going to wait around until the Fed actually says they're going to do it. They're going to adjust before the Fed says anything.
Yep.
And sometimes the question isn't whether they're going to lower them, but the question is how much are they going to lower them by? Is it 0.25 or 0.50? And after the adjustment
today, 6.6.
Right. So let's just say that the market is like 40% sure there's going to be a 0.5 rate cut, and 90% sure there's going to be a 0.25 rate cut. And then the 0.25 comes in, and then rates go up. Well, it's because a large portion of the market was thinking it might have been a better cut, and it wasn't. So that actually happens, and people call. They're like, "Hey, I heard the rates were cut." And I'm like, "Yeah, well, the rates are higher." And I'm like, "Well, you guys are evil." It's like, "Well, no. I promise, it's not how it works. We just go by the bond market. And it can be very frustrating for all that are involved."
And we're going to go back to the fact what you and I have been talking about is for the last year, 2 years, since October of 22, so almost 3 years now. Rates have almost stayed in a band between 6.5 and 7.5. Outside of one low point and one high point, between 6.5 and 7.5 for going on 3 years now.
When you take out the outliers, we've been in a very, very narrow range. Where if you looked at like a 2019 to go back to that real fast. Go back just in time a little bit. You just look at 2018 to 2021. You know what I mean? Something like that.
The bottom here around 2021, January 2021.
Yeah. We were having mood swings before, like major mood swings, and now it's like we're having just calculated stay limbo. Just stay the same kind of thing.
You notice what's interesting here is I'm seeing big peaks and valleys in here, but it's not going from one to the next like we've been seeing over the last 2 years. It's like you kind of drift down and then you drift up and then you drift down, because over here What are those things that you used to talk about? The two lines that you could draw and it would show kind of resistance points and all.
What I was talking about was the Head and Shoulders one time, but there's too many of them to really mention on this,
Yeah,
and I'm no expert at it. I am an amateur at best. I do know more than the average person, but um, to say that I study all of the ins and outs of this would be an exaggeration. But I am seeing that it looks as though if you were to look at 2023 and on, that we
yeah.
are in a downward trend, albeit a slow one,
Very
and
slight downward trend. Yeah, yeah,
you can see a downward trend from roughly 2017 to 18, and then it shoots up to 19. So
yeah.
who knows? But
Right.
um, hopefully it stays going down. That'd be nice. Downward
Yeah.
trend. Continue
But
down.
interesting, right? Just I don't know. The more it changes, the more it stays the same. Something like that. Mortgage.
It's important to note that when it was that low, it was a manipulated low. The
Yeah,
Fed,
exactly.
and I don't mean it like a secretive manipulative. It was out in
Oh,
the open. Everybody knew
yeah,
they were doing it, and that it's not even a political talking point at this point. I just want to be really clear on that. The Fed was printing money and buying our own bonds to keep the rates
that's
low.
right. Yeah,
Okay, let's go.
artificially. Mortgage rates hit a year to date low this week. Could be volatile in the coming weeks based on new economic data. Funny thing happened when the Federal Reserve began cutting interest rates last fall. Mortgage rates went up. Huh, imagine that. Now the central bank is gearing up to cut benchmark interest rates again, and there's a chance something similar could happen once more. The reason today's mortgage rates already reflect expectations about the Fed's next move. This week they hit 6.58, the lowest level since October 24. Keep in mind, guys, that is an average across all mortgages that went out. So that's not saying that rates are 6.58. That's an average.
Yeah, in fact, just as
Um,
a little side note, most lenders that I've worked for don't offer rates in that fraction. They
no,
offer rates in an eighth of a percent. So
6.5, 6.625,
yeah,
6.
yeah, 6.5, 6.6. Yeah, exactly. 1.25, that kind of stuff. You would never see a 6.58. At least I've never seen one. I'm sure at some mortgage company it might exist, but for me,
Yeah,
I've worked at 6 or 7 different mortgage companies. I've never seen that before. So
right.
so it really do everyone take that with a grain of salt.
So yeah, averages there have nudged down.
Oh, and by the way,
Um,
when these people have to talk about rates, they are not regulated like I am,
right.
and so they can be wrong and it's fine. Whereas if I say it out loud, I have to actually have a disclaimer and put an APR and a bunch of other stuff with it, which is why I actually don't talk about rates on the show. If anybody ever pays attention, it's Chris that does. Yes.
Yep. So a number of economic data releases between now and September 16th, 17th could lead to rate swings. That's when the Fed meets next. Could lead to rate swings in the coming weeks. The relationship between the Fed's rate cuts and mortgage rates isn't direct, and mortgage rates are sensitive to a number of other factors, most notably bond yields. And that's what Steve was just talking about, right? Rates have been coming down. I'll come back over here. I mean, rates have been coming down. This is July 20. Sorry,
This is not
this
July.
is May 26th,
Oh,
and they've been dropping. And then right in here is July 28th, about the time that we found out about the corrected jobs numbers. And then they dropped almost 25 basis points, almost 0.25% in that time. So again, what Steve's saying is the market's already priced all this stuff in. Oh, sorry. For mortgage industry professionals, moments like this can be a frustrating time. You were just saying this. Mortgage rates stayed stuck in the high sixes for most of this year, stymieing affordability, stretched buyers, and keeping refinancing action limited. Now that rates are finally moving lower, they're fielding more calls from prospective clients. You told me you just got a couple of people reach out to you recently, right?
hmm just today.
Um,
Yeah.
but many customers say that they want to wait until September to move forward in hopes that rates are going to drop farther the next time the Fed drops rates. Oh my gosh, it's my least favorite thing to hear. Taylor Sherman, a mortgage loan originator at Barrett Financial in Tucson. I'm like, well, that's already priced in.
Tell us how you
Yes,
really feel, Barrett. Yeah.
Fed policy determines rates, but it's really about how the market views Fed policy. Good Lord, you said almost that exact. Do they teach you that shit in mortgage school?
No,
About
but
that
I think he
statement?
said it better than I did, though. And honestly, most lenders don't even know that the rate is tied into the bond market unless they're told that. And then they say that line, but they couldn't tell you what a bond market was to save their lives.
Yeah.
I
And by
couldn't.
the
I
way,
couldn't for like the first 4 years of my career. I was taught well, and I never. I was told how things were affected, but I mean, tell me right now how many people, percentage-wise, know what treasuries are?
I would say less than 5% of the population.
At least. And do you even care if you're selling
Nope.
mortgages? Right? Not really. And I didn't really care until I started doing the show, to be 100% honest with you. I didn't want to sound like an idiot, so I started really looking into it. And well, that's not entirely true, but I definitely kicked in an overdrive for this show.
Well, there you go. And I probably still have half the knowledge you do at this point. So
Oh, dude, I
I'm trying.
again,
I'm
I'm still
trying.
an amateur.
When the Fed cuts interest rates, rates on debt tied to the prime rate, like home equity lines of credit and credit cards, typically drop soon after. Okay, so that they're saying that the Fed front runs credit cards and HELOCs. I didn't know that. But the rates on standard 30-year fixed mortgages aren't linked to prime and often don't react much. Sometimes, like last year, mortgage rates even move higher when the Fed is moving things down. Mortgage rates are influenced primarily by 10-year Treasury yields, which move in response to a range of factors like market expectations about inflation, future government borrowing, and what the Fed's doing. Mortgage spreads, the difference between the 10-year yield and prevailing mortgage rates, also play an important role in rates and vary based on other factors like market volatility and demand for mortgage bonds. I want to let's jump off there because you told us something last week that I didn't realize. They're talking about 10-year yields, but you said it more closely tracks 2-year.
Yeah, and then we even looked at it. You
Yeah,
superimposed their changes over the 2 year and zoomed out, and it was like they are always behind the curve, but it is exactly what they follow. They if the 2 year is doing it, after a few months, they're going to do the same thing.
and that makes me want to do this 2-year Treasury.
But that's why I think they're going to lower rates either this month or next month. I was pretty confident, but as more data comes out, of course, confidence can
Yeah,
increase or decrease.
let's see what they're doing here in the last couple of days. Oh, crap. Kind of holding steady since the beginning of August.
Yeah, when we last talked, I believe it was on one of those dips.
I think it
Or it
was right
was
here. Yeah,
maybe
820.
slightly recovering from it, but yeah. So, look, one of the things I tell my clients is that if I really knew what the industry was going to do, I wouldn't be doing mortgages. I'd be on E-Trade all day. I'd
Yeah,
be making millions in my boxer shorts. So, take everything I say with a grain of salt. We can guess, so can all the economists out there.
yeah.
But I mean, nobody really knows what's going to happen.
No. The other thing that I was on X this morning, and I didn't pull up the articles before. I just started thinking about it, but they were talking about this spread, the mortgage spread, and we're at. I want to say this morning was around 220 basis points. Over the last 3 years, the spread had grown to as much as like 360 or something. But the average, this was what got me. The average since like the 80s has been 176 basis points. So
Yeah,
we're still from a perspective of the spread, we're still far away from where the spreads typically are. So I don't know what it means. It was just interesting to me that that spread is larger now than it has been, even though it's shrinking. If that makes
but
sense.
statistics are the first liars, right? What I'd be interested in, I mean, how many ups and downs have we had since the '80s, right? Jesus, what I'd be interested in is knowing if that average that you told me about since the '80s includes all the volatility recently. Because if you were to do away with that, I wonder if it was much more stable. I don't know though. I started lending in 2012, so I have no idea.
Yeah. Um, Treasury spread. Seeing what this gives us. Okay, this is where we are. So yeah, this is where they were talking about being a huge spread. Oh, that's 2 years back. Show
I
all data.
like that optimistic future there. That's funny.
Yeah, right. Well, that's interesting that they're predicting it to go up, but that's the spreads, right? So the average has been right about in this band,
They know better.
outside of a couple of catastrophic or not catastrophic, but tumultuous. We'll call them tumultuous times.
It'd be really fun is if you could see their predictions based on a base, and then what actually happened.
Yeah, and that would be interesting.
Yeah, I'm sure they conveniently left those out of the
Yeah,
data.
more likely. Nobody wants to talk about that. But Anyway, man, I mean, what's your take? I'll give you a chance to kind of redo your predictions. Like, what do you think's going on with interest rates before the end of the year? And guys, if y'all are watching, comments, what do you think's going to happen with interest rates? Help us out here. It's hard doing all this stuff off the top of our heads as we're just talking. By the way, like I don't. This
I'm
is like stand-up improv comedy. This is tough.
I've had a rather interesting day.
Okay,
Talked to a realtor that her husband works at the Chase building, the one off 183.
183. Okay,
And
Northwest Austin for you guys not familiar.
when she had explained to me earlier that, like in March, I think it was, of this year, the building was going close to bankrupt. Their occupancy level was so low that the loan was called due, and they had to go into some sort of negotiations. And then I heard from her today, obviously, which is why it's on my mind. Um, that she's now been hearing about a bunch of other buildings that are going through the exact same thing. But they're not really advertising it. Obviously, they're trying to
Here in
keep it
Austin.
hush hush. Yes, here and
Okay,
around Austin. Right
interesting.
before right before the show started, I asked AI to look into it. Right, and I was like, hey, how many are you seeing? And it started climbing. It was like 17, 24, 29, and then after like 3 minutes of waiting for it to think, I was like, all right, I gotta join the show. So I joined the show. So I haven't actually let it finish. I haven't really been keeping tabs. I do residential mortgages. I don't do commercial real estate. I actually can now. I have an outlet for this, but that's brand new for me, and it's not something I've ever done before. So I'm to be even more specific. There's other people in my office I'd refer you to because I think they do a great job, but I'd tag along and learn what I could, right? But long story short is that there is such a thing that we've talked about many times on the show, but I talked about it with you in like 2020, 2021
Yeah,
about commercial mortgage-backed securities. Um, People have heard about mortgage-backed securities. If you were
oh,
alive in 2008, you absolutely have heard the words mortgage-backed securities. You may not
with
have heard that phrase
with
with
the scene,
commercial
the Big
before it.
Short. Yeah,
So
right.
yep. Big Short's all about it. You may not have heard it with commercial though before it. So commercial mortgage-backed securities, and it's exactly what it sounds like. Instead of mom and dad's house, it's mom and dad's business place, right?
Right.
Now, just to sum it up real fast.
No, yeah,
Um,
that's it. That's accurate.
and so I don't know. I think I think if what I'm hearing is correct, then the rates would fall, but in about 2 or 3 months,
Okay.
because the Fed won't get ahead of anything. They can't.
Right.
They cannot afford to get ahead of anything. The way they're set up, if they do get ahead of it, they're in big trouble. They cannot fix before a problem shows up. They don't
Right.
give you vitamins. They give you stitches. Okay. Um, I didn't say they cause the stitches, but they clean up basically, right?
So
Um,
this is the reason that Trump calls Powell too late Powell.
but the joke about that name though is that it doesn't matter who replaces Powell
No,
or if Powell
no,
stays because the Fed cannot change. It's like telling a dog to start meowing, right? And then it does it, and people like YouTube. It's not really a dog. Maybe it's mixed in with others. But you do you know what I mean? Like it can't happen. I'm sorry, it can't. If they do get ahead of it and start making policy instead of reacting to things, then they can't continue printing money. And if you ever really want to understand why, you can go ahead and ask me. It would take me like 6 hours of a lecture to like really explain it, and I don't want to do it here. I'm actually not prepared to do it right now. But yeah, but the bottom line is the Fed cannot be out ahead of things. They have to be behind things.
yeah, yeah.
Just trust me.
So you're thinking we'll see a drop in 2 to 3 months.
I was saying 1 to 2 at the beginning of this episode, and
Ah,
that's what I would have stuck with, except the story that I've heard today. I'll say
oh,
I'll
with
say
the
two or
commercial
three.
mortgage back. Yeah.
I'll say
Well,
1 to 3.
but do you think that the mortgage back stuff will actually slow it down? I would think that would accelerate it.
So
Commercial mortgage back security.
there's an old saying, and that's if you owe the bank $3 million, you have a problem.
Yeah,
If you owe the bank $300 million, the bank has a
they
problem.
have a problem. That's right.
Okay, so um, these buildings, like the Chase building, I don't know what it went for. I'm guessing it's in the tens, if not
Tens
hundreds
of
of
yeah.
millions. Um, but I mean, those buildings. I mean, that building's not even one of our biggest around here. You know,
No, no,
it
not even
is
close.
right around that area, maybe, but like downtown is, they trump those buildings, right? No
Yeah,
pun intended. Um, and so, if they're having trouble too, and I'm guessing they are,
I would think
there
so.
there were a few others that were mentioned by name that because I don't have evidence, I'm not going into it right now.
Right.
I don't feel like disparaging anybody, but I do know about that one building, and I did look it up, and there was a news article about it in March, like she was talking about.
Does
Um,
Chase still own it?
I don't think Chase ever owned it. I think Chase
Okay.
was renting the
Like
building.
a major
Yeah.
tenant. I was about to
Now, in
say,
fact, I don't even know who the landlord was, but whoever the landlord was, their occupancy went too low. Their due on sale clause was called, right? And I'm guessing that part, but I do know that's how it works with mortgage-backed
yeah,
securities, right? And if there's no one in the building and you go a certain amount of months, the bank's like, okay, that's it. Let's pay us up. This is not looking good, right? It's built into the contracts. It's called a due on sale clause, and so they hit that. And then they had to go into renegotiations. And just recently, she was saying that they have gone bankrupt. But I looked that up and I haven't seen anything like that, which is also why I'm not using their name right now. So details.
yeah.
But bottom line is that she had been hearing other things, and um, I don't know. It really brought it to my attention in a way that I hadn't really thought about for a while. Which, of course, we've talked about it on the
Yeah,
show. But
yeah,
if it's now becoming real, it just hasn't been real for so long. Like, we know it's been a problem, but somehow they stayed afloat. Well, okay, well, these people are now going to be told, okay, you now owe us the whole bill. Well, what's the whole bill? Well, the whole bill is $200 million,
right.
right? Or let's just say $100 million. Okay, so you need me to pay $100 million in cash. I've been running a business. Everything I have is reinvested in it. I don't have $100 million just lying around. I'd have to borrow that. No problem. You can just do a refinance at
Yeah,
double the
today's rate.
rate. Yeah, at double the rate you had before. And oh, by the way, we're still going to make sure you have to fill that building up. So now you have this dying building. No one's renting it from you. If they are, it's only half full at best. You
Yeah,
have this huge payment, which is about to double in size. You've been losing money for years because you needed to be at least like 70% or more occupancy to make money. You've been at 50. You've just been losing your mind. And now the bank says, we're going to double your payment, and you better fill it up, or we're going to ask you for that money back real fast.
yeah,
You can have it back. Thanks,
yep.
no thanks. I'm good. Take the building. I want this off my books, right? And that's what will happen. And when it does happen, the bank then is held. They have massive losses. Let's put it that way.
Yeah.
And those
'Cause
massive
they're not
losses
going
would
to sell. I
translate.
mean, we've seen the stories about stuff in San Francisco selling at 25 cents on the dollar.
But here's the
Taking
question.
75%
So,
hits. Yeah,
so after 2008, and most people don't know this. Feel free to look it up. I'm not a fringe conspiracy person on this. I promise. Um, in 2008, we did a bailout, a quantitative easing, right?
yep. Oh,
Where we printed money, and we bailed. We did a bailout.
all the
I
banks.
don't I don't want to get into the details, but that's okay.
It was
After
called
that,
Park if you want to look it up.
yeah, we can. That's, again, I'm not in a lecture hall. So after that, the government changed the laws, to allow something called a bail-in. This is where you don't have to trust me. Just look it up.
I hadn't heard of this.
What is a bail-in? A bail-in is where the government takes money from the depositors, you and me, to pay for companies that are too big to fail, like they did in 2008.
Yeah.
You're reading about it right now, aren't you?
Yeah.
Yeah. And so I don't know if this next time around we're all about to have smaller bank accounts, or if they would do a bailout like they did the time before. But if anyone wants to know why there's inflation today, it's because we've printed money.
Yeah.
Period. That is the definition of inflation. To inflate, like a tire, make bigger, right? Inflate the monetary supply. That's called inflation.
That's what it is.
And
If you have
some
more
inflation
dollars,
is good. You want inflation to keep up with the population rise so that everyone has money to spend, right? It makes sense. You want prices to slowly go up. It's better than stagnation.
which is
Um,
why the 2% target, and that reminds me of something else I read this morning.
right.
Keep going.
No, go. I'm basically finished. I'm fearful though of the immediate, and I'm fearful of the future. I feel like we're already in a recession. We have been for at least a year.
Yeah. Oh,
Um,
Buddy
and
Rush
and
is back.
we're not seeing huge job numbers like you'd want to see, right? Especially with the rates being so high. It's very disconcerting.
Um, I
How's it going,
don't know what
Rusty?
to search. I don't know what to search, and so I'm just going to tell you a little bit of what I read this
Mm.
morning.
Rusty, please call me. I think you have my cell phone number. I'd like you to give me a call, not now, but tomorrow, please, sometime in the morning. Please, I'd like to just talk to you. I have something to tell you.
So the what I was reading this morning was talking about how the jobs numbers, and I don't guess I ever realized how that jobs numbers aren't recorded; they're calculated. The government jobs numbers.
It's
So there's just a calculation that comes up with the jobs numbers, and that's one of the things that's leading to overinflated jobs numbers and all this other stuff.
the best thing that ever happened to the jobs numbers was the ADP numbers.
Rules are looking good.
Actually, you're not that far off, Rusty, from what I want to talk to you about. You're actually pretty darn close to it, but it'll be a fun conversation, I promise.
Yeah.
What was I saying?
No, I was just saying that the jobs numbers are calculated, right?
Oh yeah, yeah. Dude, when the private payroll numbers came out, they're like, "This is how many paychecks we're sending,"
Right.
right? Screw your estimations. Go ahead.
They're talking about the estimation, and they're saying one of the reasons that, and I don't know how this factors into the calculation, but they were saying that the birth death ratio is so far off that that's what's screwing up the jobs numbers, because somehow they're factoring that into the calculation for the jobs numbers, and our ratios are off because the deaths are increasing and births are slowing down, and so that's screwing up the jobs numbers. I it was on X. It was one of the news feeds I follow, and I didn't read all that much into it. I was busy with stuff, but anyway, pretty damn interesting to me.
I'm not going to claim to be an expert on jobs numbers when it
Yeah,
comes to how the government calculates everything, including the age, but I'm guessing that means that they stopped counting after a certain age
I guess.
or before a certain age. I don't know. Wouldn't really be worried about the before the age, but like maybe after 60 something they stopped counting, or early 70s or something. I don't know.
Um, oh, it was zero hedge. But what are they saying? Sorry, I'm off now, man. I'm on this tangent. I don't guess it makes any difference. Zero hedge is just saying 57% of all year-to-date jobs are statistical fakes because of that birth death adjustment. Oh, that's what it's showing. I got it. Okay, okay. This makes sense to me now. So what it's showing is this is the adjusted jobs number. This is the real jobs number. When you take out the adjustment for birth death. So
I can
we're
see
off
how
by,
that's extremely confusing.
yeah, we're off by like almost, yeah, it's a magnitude of two. It's a freaking, it's, yeah, 57%. They just said that. So it's showing us double what there actually is. And so there was another post on this, and I think it was Zero Hedge also. And what they were going back to was that we're going to start seeing, like, it's going to affect rates and the treasury yields and everything else, because the jobs numbers are going to continue to be revised in big numbers.
The other lie I think we're hearing is this AI lie that it's going to be, man, I hope it's a lie. But this message that just like the industrial revolution, it was scary at first, but created way more jobs.
Why
I
is going to
know
create more jobs?
I know a ton of people that used to help realtors with stuff that are no longer employed.
Yep.
From videos,
AI has saved me
scripts,
so much money every month.
yep, scripts to an assistant. Like, hey, I just need you to put this on the MLS. Well, you can have the AI basically do it for you. I mean, I don't know if they can actually post it, but they can write the description. They can select the best pictures. They can. I mean, it's unbelievable how the assistant is replacing people left and right.
Yep.
And one assistant with AI could easily replace three or four other assistants.
That's
Uh,
how I see most realtors doing things. We all have like one VA that does everything. I have a VA and an editor.
So I
and other
helped.
stuff.
I was coaching for a while. I really do enjoy consulting. You know, if I can help, God, I really get passionate about it. It's very fun for me, and I helped some ladies with an advertising firm get into AI, and they then were so excited to tell me that they fired three employees because they don't need them anymore, and they're saving like $150,000 a year. And it was like, wow, I'm so excited for you, but man, my heart goes out to those people. You know,
Yeah,
it's
I
like, oh
feel
my
real
God, what are
shitty
they
for your
going to do?
employees. Yeah. Wow. Wow. But and you're one person, right? How many times does that happen every day?
Oh my God. Yeah, I don't see it creating jobs. I
No.
see it allowing people to do a hell of a lot more than they used to do. It's not as good as people want it to be, and I know there's a lot of arguments
Yeah,
against it. But if you look at how much better it's gotten in just the last year,
it has.
and
I will tell you this.
you extrapolate that on a timeline going forward, it doesn't take many years until it's way better than us, not just better or as good.
Yeah. I will tell you this. If I had an assistant that I talked to today, the way that I talk to ChatGPT, I would be getting a suit. Um,
Let me warn everyone out here that's listening, including you.
oh, I
Um,
know. I saw the article. Go ahead.
what article?
About how all of the data that you put into any of these AI platforms is saved.
So there's only one that claims not to save it. I mentioned this today to a friend, and he was like, "Yeah, but I don't trust that bastard." So you know what? Take it with a
Of
grain of
course,
salt.
it's Grok, and he doesn't trust Elon. Okay,
Exactly right, but it's Elon
everything's
Musk's.
political.
Hey man, all good, all good. At the end of the day, um, everyone else has said our house is on fire, and Elon's like, "Here, you can't see inside, but ours is not on fire." And
That's right.
so, out of all my options, unfortunately, that's the best one you have today that I know of that will not sell your data. But if you are on ChatGPT, specifically, they have members of their board that are known to work with many other industries and specifically tied in for that reason. So there have been many articles written on this. It's not just me. If you do something on ChatGPT, you are sharing your information with possibly lots of other companies. Now, okay, no big deal. Unless you ask it, hey, what do I do for heart palpitations? And then they alert your insurance company, who then raises your rates as a result of the red flag that popped up on the AI platform. And that's a real risk because most of us are not Googling anymore, which, by the way, you shouldn't do that anyways. But most of us are not doing that. We're going straight to the AI saying, hey, I'm having pain on my right side of my chest. What could it possibly be? No, don't have that. I don't have that. I haven't taken that medication. Oh, thanks for narrowing it down for me. You are an insurance
Yep.
company's dream if that's what you've been doing.
And if you don't think that insurance companies are buying data to try to save themselves
So they're
money
on
and
the
keep
board.
it online,
They're on the board.
yeah, it's yeah, yep,
So I recommend not giving it anything that's not, be wary of what you talk to the AI about. Did you hear about Amazon? I think I talked about it on the show a long time ago.
I don't know.
Right when ChatGPT came out and people started using it like crazy, all of a sudden this letter gets leaked, an email gets leaked from one of the head lawyers at Amazon, and it said, "We've detected our proprietary code
Oh
online
yeah,
because one of you asshole engineers," they missed the asshole part, has gone to ChatGPT, uploaded our code, and asked it to help with the code. And yes, it did help with the code, and it made it so much more efficient. And you told us how smart you were. Unfortunately, we were also told by our competition that its super smart artificial intelligence computer was like, hey guys, you should probably know that your competitors uploaded their proprietary code, and you can look at it if you want to because it's ours now. It's like having an assistant that's smart enough to have a million conversations and tell you when you should be alerted.
right, yeah,
Listen, I use it all day, like every day.
I
It's
do too.
very helpful.
I do too.
Just be careful.
I'm telling you, I would have already switched over to Grok, but I just have so much like
Apparently,
time in chat.
apparently, it's not as good as ChatGPT 5 anyways.
I hate
And
ChatGPT five.
only
That's what I was effing. I was
Oh, that's
effing
funny.
ChatGPT five
I-
today.
that, that that's what
I
I've
was
read.
making
Could
it
be
back
fake
and
news. By the way.
forth. Like it wouldn't listen to me. I was like, I think I may have threatened to strangle it. Um, I'm telling you, dude, I was so pissed. And what we've noticed, I've got a friend that's noticed this too, that it seems like the longer you use it in a specific session, it's almost like it gets fatigue and it starts losing its mind towards the end. You kind of have to get off and walk away and then go
What I've
back.
found, what I've found to be the most helpful is if I've been chatting with an AI for more than like 30 or 45 minutes, I'll say, "Can you please summarize this conversation for a new chat so I don't get you overloaded?" And it always says, "Great idea. Copy and paste this and let's start again." And usually it's, I'll add a little bit of context after the fact if I think it's missing something.
Yeah, that
Um,
makes sense.
well, not only does it help, it also very much reveals what it thinks it's supposed to be thinking.
Yeah, that's
Right.
true.
And
Summarize this for me. Tell me what we're doing here.
a lot of people haven't, at least I don't know about ChatGPT, but I know on Grok, you can scroll up in the conversation,
Mhm.
edit that chat box, and then start again from that spot.
Yes,
So like
I think.
if you forgot to add something, so instead of being like, oh yeah, no, I have that color. Yeah, no, and I have that one too. No, and I got it for that price. And like answering questions as it pops stuff up, you
Right.
can just edit the box, fill it all in, and then it gives you a more succinct answer at the bottom. So I don't know. Now we're not talking about mortgage at all, are we?
We're not like, hey, we told them at the beginning. We told all of you guys we're talking about
It's going
mortgage.
all over the place.
And again, if you've got questions or you want us to talk about something else, tell us. I don't care. We'll keep this going. I mean, hell, we've kept it going for 5 years now. Why would we change now?
I had some clients that put they called me today. They said they put their house on the market and it sold in 2 days. And now they are very, very surprised that it sold so quickly. And now they need to move. And
Yeah.
they're happy to talk to me and I'm happy to talk to them too. But
Right.
I think it's important to note that if you price your home for what you want, you may not sell your home today.
Yeah.
And you should absolutely listen to your realtor. And I've heard some really annoyed stories from realtors that are like, I know I'm wasting my time. I
Yeah.
know their home won't sell. I know I'm wasting my money. I know they're going to be angry with me, but I can't talk sense into them. And then, sure enough, 6 months goes by and their neighbors sell, and then and then they're still on the market.
Yeah.
It doesn't matter
And
what you
then
think
it
your home is
happens in your
worth.
face and you're trying to drop or catch a falling knife. And
Yeah.
I will say though, I'm having to look at different markets separately from each other because that's
Oh, of
not true
course.
across the board. Yeah. It's an interesting thing where some of the markets right now, I mean, we're having to adjust prices kind of because has a lot of meanings in different cases, but there's just not a lot of buyers in certain markets. Well, if it is it because timeline? Is it because
Uh,
financial issues? Is it because like all sellers have a different reason, right? And so they're not the same. That's what I mean. They're different across it all. But there's markets that just don't have a lot of buyers, and if those buyers have options that are new home builds, you have very few options at that point. I mean, case in point, this has been kind of the spread over the last few weeks in Dripping Springs. Every Tuesday, I pull data for my sellers and talk about how many properties actually went off the market. Went under contract or I'm trying to find out how many buyers are out there, right? And every week, somewhere between like we'll call it 35 and 45% of sales that went under contract in Dripping Springs are new homes. So last week it was 7 out of 18. So there were 11 properties that were not new homes that sold in all of Dripping Springs ISD last week.
I don't know what the APR is, and I don't know who the company is, but I do know the realtor if anyone's interested. But out here in Lago, I was told Sunday, what is it today? Monday? Yesterday. He was telling me there's a builder here offering a 4.99, or at least they were on Friday,
Yeah,
fixed. And I was like, oh, it's a buy down. He goes, it's not a buy down, it's fixed.
I'm seeing a
Now,
lot of folks. Yeah,
okay, I haven't seen any other details, and again, I'm not. That wasn't my rate. I'm not offering that rate. That I'm not giving that to you.
no,
But
that's a builder rate.
this is a for the law's sake, right? I want to make sure I don't want to breach the law, right? But um, you know, there are ways to get into a house, despite the doom and gloom stuff you've been hearing.
Oh yeah,
It's
I
not as
mean,
bad as people are saying. However, I am worried about the commercial aspect of things if banks stop lending, like they did.
do you think that'll
So
trickle over into residential?
Oh, 100%. It's the same
Really?
banks that own the commercial do the residential mortgages.
I guess so. I guess so. Let me ask you this random question. And guys, if y'all are like, if you want to give me your answer on this, you're more than welcome. Drop it in the chat. Let's say you've got a substantial amount of cash right now. Okay. Substantial can be whatever, 1 million, 2 million, 3 million, substantial. If you could do anything you wanted with it in real estate right now.
In real estate, that is not where I thought you were going with that.
Well, let me here. Well, you know what? I'm not even going to limit it to that.
Good.
I'll just say this. The ultimate idea on this is to increase that amount as quickly as possible, not selling drugs.
So, look, if the banks do start losing the commercial real estates, or the properties, they'll have huge losses on their books, and the best way to get those back is to not lower rates and make less per loan.
Yeah.
So,
Oh,
I
but
think there's a good chance that the price of homes could go down a little bit.
okay.
I definitely know there's, or not know, but I'm almost positive there's a great chance that the price of commercial real estate will continue going down. Um, in times like that, the best thing to do is to either pull a Warren Buffett, where you just sit on your cash, or buy precious metals, gold, silver, that kind of stuff.
Okay.
Um, Gold, last I checked, was like 3,000 something. That's pretty high. But most people don't know this, but up until about 1900, well, and beyond that, until about 1931, and we can talk about that later. But
Yeah.
if you look at like the year 1900 and before, gold was always a 15th of silver, right around there. So you could use 15 silver pieces to make one gold piece,
Okay.
and that it was almost always constant. It's how monetary stuff was done. Today, um, you'd need like 80, somewhere between 80 to 100 silver pieces to make one gold piece.
Hmm.
And but we're not on a gold standard anymore.
Right.
But what's weird is that as the dollar's been losing value, people have been buying gold and crypto, but a lot of gold. The
Yeah.
central banks are buying tons of gold. If you were to suddenly get back on a silver and gold standard, even just for borrowing's sake,
Mm.
silver would shoot up in value. If even, let's just say it was 15 to 1 like it was in 1900. Well, let's just say it was 30 to 1 like it was in 1900.
Yeah.
The
It would
price of
double.
silver would go from like the 38 or something it is today, something like that, probably to like 270, $280 an ounce. The other thing
Oh,
that
that's almost 10x.
the other thing that most people don't know is that like 2/3 of silver has been destroyed in manufacturing processes,
Yeah.
and it's almost
All of
as
those
valuable as,
appliances and electronics that you're, getting rid of in the landfill and all this other tons of silver in them.
and they're not making silver, right? Can I say that? Are we making silver? I know we can't make gold. I don't know if
It's
we
an
can make. I
element.
don't think
Yeah.
we're making.
Silver's an element. Yeah. Not
Yeah, and
making it no
so
faster. We can
you know, I,
refine it.
I think if anybody were going to do anything, it'd be silver. If you look at the prices of both those, they're up like 20-30% this year. It's crazy.
Yeah.
Um, so I might say something like that.
Okay.
Um, yeah, that's my answer. I'd
Interesting.
protect your assets right now because I think the price of real estate. I think you'll be able to find deals. The jobs numbers aren't looking
Well, you
good.
can
Commercial
find
real
deals.
estate's looking bad. It sounds like we're going into a big recession. That's when you want cash on hand to buy stuff.
Yeah. The I don't know. I come up on a little bit of I'm on the other side of it a little bit, and I know you can. That's what Buffett does. I mean, Buffett sold off a crap ton of his assets already.
Oh,
And
he's
he
sitting on like more cash than anybody has. Period.
yeah, yeah. Um, but I mean, this is the real estate in me, dude. You're saying there's deals to be had. I'm telling you, I've seen amazing deals right now, and even if I don't know, even if we're not at the bottom, I think we're pretty damn close. Even if we hit a because what were we talking about 2 or 3 weeks ago? If we hit a recession, it's looking like it's going to be a milder recession. Blah 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 blah. even if we hit a recession, I mean, how much further is property going to go down, depending on location? 5%,
I'm just reading between
maybe.
the lines on what I'm hearing people say.
Yeah,
You know, in terms of the people firing,
yeah. He's not a tech buyer. Yeah,
yeah, in terms of people firing their assistants and um, companies downsizing and replacing workers with AI, that kind of stuff that I keep reading about left and right. In fact, friends I know that are being let go, right?
yeah.
And then what did Reagan say? Like, it's a recession when your neighbor loses your job, and it's a depression when you lose your job, kind of
Yeah,
thing, right?
that's right.
And then what I heard today about the Chase building, and then it's not called the Chase building. It's just it has giant Chase on the front of the building, so people
Yeah,
can see it
yeah.
from the highway. Um, that, and then others that I very briefly looked up. I don't know. I don't know, man. I think it needs to get better
So you're
somehow.
thinking more tied to jobs. I think Ann's agreeing with you. She said it could go down a lot more. Um, I don't know. I'm personally not buying that.
You personally, what?
I'm not buying that. I think we're close to the bottom. That's going out on a friggin' limb. Evidently in this group, holy crap. Um, I don't know,
What
man.
was what was that? Somebody else comment or something?
No, between you and Ann, that's going out on a
Uh,
limb. We're both like, no, it could go down a ton. Um, and it could. Well, yeah, and she's saying look at 0809, but 0809 was regionalized into two general areas. Like it's not like the whole country shit their pants in 08 and 09. I mean, look at
yeah, but
Texas, look at the entire Midwest. Like we didn't lose our asses then. And
brother,
the thing that I go back to is this. Okay, when you look at housing, what's going to cause it to drop? People having to sell their houses. Okay.
yeah, the market not demanding that price.
Right. But the thing is we keep seeing over and over that we don't have enough inventory and there aren't enough houses on the ground for the demand that's coming.
Yeah, but
I don't know
where is
if
it?
that is right, but where's what?
The demand that's coming.
Well, okay, and that's where I'm getting. That's where I'm going. She's saying, okay, if the dollar crashes, it's worse than 80 and '09. Yeah, if the dollar crashes, again, I have my thoughts on that too. But what I'm saying is, look, if we start going into recession, interest rates are going to drop. Interest rates are going to drop. So what's going to happen? Then your demand comes back
Well, then,
because you're not losing. I don't think AI is going to kill 10% of the jobs.
okay,
It's going to
but
kill a lot of jobs.
the real threat, though, in that situation is that inflation rate goes out of control. You start printing money to keep the rates low, right? You don't just say we're lowering rates. Rates are
Right.
dictated by how many people are buying the bonds. Period. Now,
Yeah.
when you lower rates from the Fed, you make it easier and cheaper for banks to borrow money, but the common person has no ability to do that. They have to go through those same banks who then charge them interest rates based on their books. What are their books looking like? How threatened are they? That depends on how
Yeah.
aggressive the government is, right? The banks have been buying gold in droves for years now, like 2, 3, 4 years now. I think, I think they're preparing to revalue gold.
I
The
mean,
last
possibly.
time, it would immediately get the banks out of their position. They would
Yeah.
have way more money than they were. So our country revalued gold in 19, I think it was 33, I believe. Rusty,
Okay.
correct me on this one, please, if I'm wrong. 1933. And when they did so, they were right beforehand buying gold for $20 an ounce and change. And then after that, it went almost immediately up to $35 an ounce and change after they revalued it. They said, well, the gold on our books isn't worth 20. We think it's worth 35. Now everybody else is worth that too.
Yep.
Um, well, okay, 20 to 35. If it had been 40, that's a double, right? So you were close to double, right? I mean, that's a huge increase. If you were to do that today when it's at like 3,300, you're well over 5 grand, right? Well, okay, well, that means every single bank that's holding on to gold would then have their books redoubled on however much gold they have,
Yep.
right? Right along with the government. They'd be able to immediately sell to the government, for that new amount, right? And so I think they're all playing defense on the recession they know is already here.
And
They're
all
trying
of
not
that,
to let the I think they're trying not to let the headlines get out so they can keep buying gold. And when the headlines do get out and people realize how bad it is, they're going to stop buying gold. They're going to revalue gold. They're going to say, "We're fine. What are you even talking about?"
yeah, Rusty wrote a paragraph. There's there's a reason Europe has 60-year mortgages. They've been through what we're about to go through. The only way
Yeah.
out, double the time frame and pay back to the investor that buys the debt. Same changes in the rules allow them to bail in. Yep, just talking about that a while ago. Allows the bondholder to adjust the debt repayment terms. Yeah, and
Yeah.
that's actually interesting because I think that there maybe I read it or maybe I read it wrong. I think there's some banks that are talking about allowing potential 50-year mortgages in some states. I've heard specifically
They're doing
California.
that to try to make it cheaper for you. Let me ask you something.
I mean, you
Did-
can't make any money if you don't sell mortgages.
So let me ask you something. Today, I saw this just the other day. I think it was actually I saw it today. Um, what is it? The average income for like, I think it was like a $50,000 salary, something like that. You need 8 times your salary to buy a house today. That's like four
Yeah,
hundred something thousand. Okay. What do you think it was during the Great Depression?
no idea.
Yes.
I'm going to say that it was 2 times.
So you could work for 2 years and buy a house in the Great Depression?
Sorry, I was thinking. Well, yeah, yeah, I think
Okay.
so.
You were much closer than I would have guessed you would have been. I was even trying to throw you off. It was three.
Okay,
You could buy a
yeah,
home with 3 times your salary, 3 years salary.
there you go. I mean, so see, it's not all. I don't know. It's not all anything.
I'm
Yeah,
done, man. Unless we have more comments, I think I'm out of. Unless
Rusty
you've got a
saying
question
that's
for
one
me.
way to keep people in their homes and slow the downward spiral. And was saying it was talked about in during '08 through 010, and I've seen it since then also. That's I think I really think I saw this sometime. I want to say it was just right at the end of COVID or somewhere in that time frame, just because prices escalated so much. So I think that's when they were talking about it again. But anyway, all right, man, that was fun.
Yeah, and then if you wanted to keep it real estate related, I'd send
Oh,
my millionaire money. Right, I would send letters to people, tell them I'd pay half of what they want. If the
just
value
find people
costs
to
a
buy.
million, I'll give you half a million for it. That kind of
Yeah,
thing.
yeah. Just trying to find the people who are in such a bind they have to sell.
Yeah, well, RV parks are going to be huge. They already are. It's not like they're going to slow down when people get lose their money.
Yeah, no,
So
no downsize their living. That's right.
yeah, that's a huge one right now. Okay,
All right,
peace out,
guys.
brother.
That's what we do on Tuesdays or on Mondays. Sorry, it's Monday. That's what we do. See you next Monday. Thanks, my friend.
Cheers, sir.